Kawaljeet Saluja is Executive Director and Head of Research at Kotak Institutional Equities, who's watched this space for a long, long time. Kawaljeet, great to have you with us here. And Happy New Year from all of us here to you, your team. To your mind, what are the top 2 or 3 things which will be the most important for investors who've been holding stocks or who've been wanting to buy into some of these large cap IT names?
I guess the key thing which everyone will be focused on is on revenue acceleration in FY25 and whether there are any clear signs of visibility of that acceleration. Now, 2 things will give you that visibility. One is, essentially your improvement in discretionary spending. Let's say if companies indicate that discretionary spending, budgets have closed, they are looking all right, then that will give confidence. Though knowing companies, typically in the month of Jan, they do not say a whole lot. And second would be mega deals, large deals, or your TCV numbers, which we expect to be fairly muted for this quarter. So I don't think that there'll be anything much that will come out from the quarterly numbers to give visibility on calendar year 24 or FY25, which is where people will pick up cues from macros rather than company-specific commentary. If you're looking for positives, then December would be the worst quarter, so March would be better. At least many of the companies would return to growth, yeah.
Okay, so you're saying that compared to the previous quarter, this one is not going to be as bad. Maybe sequentially things may improve, right? That's the right way to look at it?
That will happen in March. That will happen in March 2020.
In the March quarter.
March quarter, that's right.
Okay, got it.
December is
but I mean, no one has any expectations from this December quarter either, right? They're all expecting either flat or slightly some amount of pressure, etc. But in the commentary, just to take that point forward, is there any hope for a revival in 2024 that we can expect?
There will be an improvement in, the growth for FY25 will be better than FY24. And there are a couple of reasons why growth in FY25 will be better than FY24. First is that companies will get between 2 to 4% of revenues from mega deals. That's something which did not exist or other was not there at the beginning of FY24, but which would be there in the beginning of FY25. Second is that, in FY24, there was unusually high number of program cancellations and reprioritization, of programs, which, the same intensity would not continue in FY25. So I guess, FY25 will be better than FY24. But the key question is that would FY25, be strong enough to meet where the current consensus estimates are, which is, let's say, for tier 1 companies, a growth rate in the vicinity of around 9 to 10%? I don't think so. So an improving direction, improving trajectory, yet, even with that improving trajectory, there will be revenue and EPS downgrades once this quarterly result season is done.
Okay. Hi, Kawaljeet. Good morning. So maybe another quarter of pain is what we could see before moving on from here. Kawaljeet, if you had to pick a couple of companies, which could deliver a positive and a negative surprise, you could name 2 or 3 companies, from your note this time around, and a couple of factors that we should be looking at as well.
Nigel, if you're putting out a preview, I guess that just encapsulates our expectations. So I guess nothing much would change. But if you're looking at companies with, a reasonably good December quarter, it would be persistent. I think they deliver a fabulous, growth. And then you will have mega deal ramp-up led growth for HCL Tech, which on a sequential basis will be fairly high at 4.3%. But on a YOY basis, given the product seasonality and the noise, the growth will still be at a moderate 0.8%. But, if you look at the pack as a whole, or let's say the large cap, the fact is that the growth rates have slowed down. So I guess everything boils down to, FY25. What I'm essentially saying is that you will not get enough cues from the management on FY25. and you have to take a call based on macros. And our view is that business will improve for sure, though not to the extent compared to where the consensus estimates are.
Okay, and market consensus expectations are already high, and they'll have to be brought lower even for FY25, as you're saying. Kawaljeet, just a quick word on Wipro, if you can. Should we expect anything there?
In terms of...
I mean, Rima was talking about maybe there have been reports of promoters, not very happy with how things have been running there. There have been top management sort of exits, etc. as well. Stock's been an underperformer. Is there potential for some change? Should we hear anything?
I mean, look, I think given the way the company has performed, it's logical. Even the CEO would be not very happy with the way, let's say, the company has, performed. But, beyond that, it's just speculation. And I don't want to get into, those kind of speculation as such. The fact is that the environment has been challenging, and Wipro's challenges have been amplified by the fact that they have a high exposure to discretionary spending or consulting, revenues here. And let's say if the discretionary spend recovers, then of course Wipro will also be a beneficiary of it here.
A disproportionate beneficiary? If consulting is I think amongst the large cap IT names, Wipro's got the highest, right, exposure. So, as you say, you Okay, all right. Got that. Kawaljeet, good to have you with us. Thank you very much for your time, and hope to speak with you once we have the numbers with us for a quick review. Appreciate it. Well, that's Kawaljeet from Kotak with his perspective on IT services and the third quarter numbers there.